Miles beneath the surface of the South China Sea, the crushed hull of a massive cargo freighter rests in eternal darkness. On paper, this wreck represents a tragic maritime disaster, a sudden structural failure that sent millions of dollars in commodities straight to the ocean floor. The crew miraculously escaped in lifeboats, clutching a harrowing tale of a rogue wave or an unexplained explosion. Yet the true disaster was not an act of God, but an act of accounting. This sunken vessel was the opening gambit in one of the most audacious financial crimes of the 20th century. The ocean has long been an ideal accomplice for those seeking to erase evidence. When a ship slips beneath the waves, it takes its secrets into an abyss where no police force can easily tread, leaving behind only the testimonies of those who survived and the paperwork filed at port. This geographic reality birthed a specific breed of deception known as scuttling, the deliberate sinking of a ship by its own crew or owners to claim insurance money. It is a crime that relies heavily on the sheer physical impossibility of a deep-water crime scene investigation. Enter Frank and Michael Strouth, two brothers who recognize the unparalleled potential of this watery void. They did not view the ocean as a treacherous frontier, but as a limitless, untraceable shredder for fraudulent documents and rust-eaten hulls. The Strouths were not traditional pirates holding crews hostage at gunpoint. They were maritime architects of deception, orchestrating a sophisticated international shipping fraud from the comfort of landlocked offices. Their ambition would soon culminate in the creation of the infamous Phantom Fleet, a ghostly armada designed for the sole purpose of dying at sea. The mechanics of their maritime insurance scam were brilliantly perverse. The brothers actively scoured international shipyards for aging, unseaworthy vessels that were essentially floating scrap metal, purchasing them for pennies on the dollar. Once acquired, they engaged in overinsurance, a deceptive practice where a policy is taken out for a value vastly exceeding the actual worth of the insured asset. Through a labyrinth of shell companies and falsified appraisals, a dilapidated freighter worth perhaps $200,000 was suddenly insured for $3 million. To mask their tracks, the Strouths exploited the fragmented nature of international shipping laws. They registered their newly acquired rust buckets under flags of convenience, utilizing countries with notoriously lax maritime regulations and opaque corporate secrecy laws. This jurisdictional arbitrage meant that the company owning the ship, the nation registering it, the crew sailing it, and the insurers underwriting it were scattered across 4 different continents. If a vessel went down, unraveling the corporate ownership structure alone could take investigators years of navigating bureaucratic red tape. With the traps set, the deliberate ship sinkings commenced in some of the most remote coordinates on the nautical chart. A vessel would depart port heavily insured, supposedly laden with valuable cargo, only to mysteriously founder a few days into its voyage. The crews, often complicit or deliberately kept in the dark until the final catastrophic moments, would radio desperate distress signals before abandoning ship. Within weeks, the Strouth brothers' corporate entities would submit massive claims for the total loss of the hull and the phantom freight it supposedly carried. The immediate financial blow fell upon the syndicates of Lloyds of London and other major global insurers. These institutions operate on the principle of utmost good faith, a foundational concept in insurance law assuming that all parties are acting honestly. When faced with official distress logs, corroborating crew testimonies, and a complete lack of physical evidence to the contrary, the adjusters initially had little choice but to authorize payouts. Millions of dollars bled from the insurance markets into the offshore accounts controlled by the Strouth network. Proving that a sinking was deliberate rather than accidental is a monumental task when the primary evidence is sitting under 2 miles of crushing water pressure. Investigators could not simply tape off the crime scene, dust for fingerprints, or examine the hull for explosive residue. They were forced to rely on the paper trail left behind on land. Unfortunately, that trail had been meticulously designed to be as murky and unnavigable as the ocean trenches where the evidence lay buried. Historically, maritime law heavily favored the shipowner in the event of a total loss, a legacy of an era when ocean voyages were inherently perilous and unpredictable. The burden of proof rested squarely on the insurer to demonstrate malicious intent, a standard that was nearly impossible to meet without a confession or a glaring administrative error. The architects of this deception understood this historical precedent perfectly, using centuries of maritime tradition as a shield against accusations of fraud. The illusion extended far beyond the doomed vessels themselves. The brothers fabricated entirely fictitious cargo manifests, detailing holds packed with expensive electronics, high-grade machinery, or premium agricultural products. In reality, the ships were often loaded with worthless ballast, rocks, or seawater to simulate the draft of a fully laden freighter as they left port. bribed port officials, and forged customs stamps provided the necessary bureaucratic veneer to convince underwriters that a valuable commodity had just been swallowed by the sea. The Lloyds of London investigation began not with a dramatic underwater expedition, but in dusty filing cabinets and telex rooms. Adjusters and maritime detectives started pulling at the frayed edges of the claims, attempting to verify the existence of the companies that supposedly manufactured the lost cargo. They encountered a maddening maze of disconnected phone lines, empty storefronts in obscure tax havens, and corporate directors who existed only as signatures on forged documents. The sheer scale of the geographical evasion was staggering. The breakthrough came when investigators stopped looking at individual sinkings and started analyzing the macro patterns of the Strouth operation. A lone detective noticed a statistical anomaly. There was an unusually high concentration of total losses occurring in remarkably similar circumstances, always in deep water, always with the crew surviving, and always linked back to a specific cluster of obscure holding companies. Furthermore, meteorological reports often contradicted the crew's claims of sudden devastating storms in the areas where the ships went down. This macro-analysis exposed the fatal flaw in the global maritime registry system, because insurers, port authorities, and national registries rarely shared databases in the late 1970s. Repeat offenders could simply change a ship's name, paint over its hull, and register it under a new shell company to wipe its history clean. The fraudsters had relied on this informational isolation, assuming that an adjuster in London would never connect a sinking in the Mediterranean to a suspicious claim filed in Singapore 3 years prior. Armed with this new perspective, insurers deployed specialized maritime detectives to ports across the globe, tasked with tracing the physical movements of the fleet before they vanished. These investigators interviewed disgruntled former crew members, scoured dry dock records, and meticulously reconstructed the final days of the sunken vessels. They discovered that many of the ships had undergone suspicious modifications just before their final voyages, such as the installation of unauthorized valves designed to flood the engine room. The final nail in the coffin was the unraveling of the phantom cargo illusion. Investigators tracked down the supposed suppliers of the lost goods, proving definitively that the massive quantities of commodities claimed on the manifests had never been manufactured, let alone loaded onto the doomed freighters. The paper trail, once the greatest defense for the criminals, became their ultimate undoing, as detectives documented the flow of bribe money to port officials who had rubber-stamped the empty holds. Even with undeniable proof of a global deception, bringing Frank and Michael Strouth to justice presented a logistical nightmare. Law enforcement agencies from half a dozen countries had to coordinate their efforts, navigating conflicting extradition treaties and overcoming the brothers' attempts to hide behind their labyrinthine corporate structures. The investigation required unprecedented cooperation between private insurance detectives and public prosecutors, blurring the lines of traditional financial crime enforcement to catch borderless criminals. The psychological profile of the orchestrators revealed a dangerous blend of arrogance and sociopathy. They viewed the international shipping industry not as a vital artery of global commerce, but as a remarkably naive casino where the house could be reliably beaten. Their total disregard for the lives of the crews they sent out on deliberately sabotaged vessels highlighted the chilling human cost of their financial machinations. To them, a sailor was just another expendable asset in their grand ledger of deceit. As the international dragnet tightened, the financial empire built on sunken steel began to collapse. Bank accounts were frozen, shell companies were unmasked, and co-conspirators began to turn on their employers in exchange for leniency. The meticulously constructed wall of plausible deniability shattered under the weight of overwhelming documentary evidence and coordinated global law enforcement action. The untouchable phantoms of the shipping lanes were suddenly grounded by the sheer volume of their own paperwork. The unmasking of the scheme sent shockwaves through the maritime industry, revealing just how deeply the rot had penetrated the systems meant to safeguard international trade. It became terrifyingly clear that the global supply chain was fundamentally vulnerable to anyone with enough capital to buy a scrap ship and enough cunning to forge a bill of lading. The realization forced a painful reckoning among insurers who had unwittingly financed the destruction of their own capital for years. Ultimately, Frank and Michael Strouth were apprehended, their reign as the undisputed kings of maritime insurance fraud brought to an abrupt and ignominious end. The subsequent trials laid bare the staggering scale of their operation, detailing how they had successfully scuttled dozens of vessels and defrauded the global insurance market of millions. The courtroom revelations transformed the brothers from mythical maritime untouchables into convicted felons, serving as a highly public warning to other would-be scuttlers. The financial devastation caused by the Phantom Fleet extended far beyond the balance sheets of Lloyds of London. When insurers suffer catastrophic losses due to systemic fraud, those costs are invariably passed down the economic food chain premiums, for legitimate shipping companies skyrocketed, increasing the cost of transporting goods worldwide. Ultimately, the everyday consumer paid the invisible tax of this deception every time they purchased an imported product, proving that maritime fraud is never a victimless crime. The legacy of the scam prompted a massive overhaul of maritime insurance regulations and investigative protocols. Insurers abandoned their reliance on isolated paper trails, establishing centralized databases to track vessel histories, ownership changes, and casualty reports across international borders. The concept of utmost good faith was permanently tempered by a new doctrine of rigorous skeptical verification. Adjusters transformed from passive paymasters into active investigators, fundamentally changing how marine claims are processed today. This case remains a watershed moment in the history of financial crime, a stark reminder of the lengths to which fraudsters will go to exploit geographic and jurisdictional blind spots. It forced the maritime industry to drag its antiquated oversight mechanisms into the modern era, replacing gentlemen's agreements with data-driven risk analysis and international cooperation. The ghosts of those sunken freighters still haunt the underwriting rooms of major insurers, serving as a permanent cautionary tale about the perils of blind trust. Yet the core vulnerability that was exploited so effectively, the vast, unmonitorable expanse of the open ocean, remains a potent threat. Today, maritime fraud has evolved from physical scuttling to sophisticated digital deception. Fraudsters now engage in AIS spoofing, manipulating a ship's automatic identification system to broadcast false coordinates. This creates modern digital phantom fleets that smuggle sanctioned oil or illegal catch while appearing on radar to be safely docked thousands of miles away. The battle between global syndicates and maritime investigators is an ongoing arms race. Modern detectives utilize satellite imagery, blockchain cargo tracking, and artificial intelligence to monitor global shipping lanes, attempting to spot the anomalies that once took human adjusters years to uncover. The tools have changed, but the fundamental challenge of verifying truth across international waters remains as daunting as it was in the era of rust buckets and forged telexes. As long as global commerce relies on thousands of massive vessels crossing jurisdictions where no single authority holds sway, the temptation for maritime deception will persist. The ocean is simply too vast, and the financial incentives too massive to ever completely eradicate the threat of deliberate sinkings, phantom cargo, and corporate evasion. The systems we rely on to supply the world are only as strong as the vigilance of those who watch the waves. The unmasking of Frank and Michael Strouth proved that even the deepest oceans cannot hide a well-documented lie forever, provided someone is willing to follow the paper trail back to the shore. Their story is a testament to the power of meticulous investigation and the absolute necessity of global cooperation in the face of borderless crime. The fight against deception is a perpetual voyage, requiring constant adaptation and an unwavering commitment to the truth. New stories weekly. Stay one step ahead of the fraud. Subscribe.